Hello and welcome. This is the Market Wrap, and we are taking a look at the week that was and what we can expect as we move into trade this week. So let's start by taking a look at the indices, the large cap as well as the small cap indices, and see where the gains have come in, where we've seen declines. Starting off with the Nifty, first of all, we have seen about a 3.3% gain, building on the kind of gains that we saw last week as well. And we have TCS and Infi right at the top of the list. This is after we've seen some amount of reversal when it comes to the rupee, but that's actually been out of the equation, considering I would suggest the big correction that we saw in IT stocks. IndusInd Bank, HDFC and Bajaj Finance among others, which have also gained. Where's the weakness coming in? Yes Bank, and we will talk about this in a little more detail in just a bit. Oil and gas, ONGC, Sun Pharma as well as Tata Motors among others, which have lost out in trade. So on the whole, it's turned out to be a good week of trade for your IT names. But let's take a look at your broader market indices, and this is your NSE 500. Once again, we have some of the unusual ones to show up on the gainers list, such as 8K Miles Software, Vakrangi, Prestigious States and Adani Power. On the losing end, IL&FS Transportation. Shankara Building Products is the one which has been discussed quite a bit this week, and so has Vodafone Idea. It stood out by declining by as much as 15%. And Power Finance Corp, of course, likely to be merged with REC. We'll be watching out for more developments as we go into the next few weeks. But let's take a look at some of the key events that shaped the markets perhaps in this particular week. So in terms of the week that was, starting off with Monday, perhaps the most important factor that we saw which moved the markets was crude coming off and hitting a 13-month low. It's at levels, the last time we saw these levels was about well over a year. Moving on to Tuesday, we also saw Moody's cut Yes Bank's ratings, and this is after we've seen 3 resignations from its board in quick succession, and this has raised some concerns with respect to it raising capital. Moving on, well, on Wednesday, we had, of course, state elections from in Madhya Pradesh and Mizoram, and of course, this is just polling. Moving on Thursday, we also had the rupee strengthened in trade, and which went below the mark, right? That is, the US dollar went below the mark of 70 against the Indian rupee. So that, of course, was a positive for the markets, especially for the importers. Moving on to Friday, we did see yet another rating agency cut ratings on Yes Bank, and moreover, on Thursday, we also had the RBI, which had reduced, or rather Friday, we had RBI reduced minimum holding norms for some of these NBFCs, on the back of which we did see advances for the whole host of these NBFCs, including HDFC as well as Indiabulls Housing Finance. And we also had the Supreme Court direct Reliance Communications to furnish bank guarantee, and that perhaps could be another pain point for the ADAG group. But that said, moving on, looking beyond the short term and the medium term volatility, says Prashant Jain of HDFC AMC. We spoke to him on the special series Navigating Through Uncertainty, and this is what he had to say about the markets going forward.
Stock markets over short to medium periods are extremely hard to forecast. People do have a view, many of us, but I have seen there is hardly any sanctity to these views. On the other hand, if you just focus on how are stocks valued, how are stock markets valued, are they overvalued, are they undervalued at a general level, then you are able to take a fairly decent guess or view on the markets over the next 3 to 5 years. And if you look at the markets today, while P's appear to be a bit elevated, and that is what most people are focusing on, but market cap to GDP in India is close to all-time lows. Now the divergence is because the underlying corporate profitability in India is passing through a very bad patch. And last few years, large corporate banks, certain other sectors are running much below, are experiencing much lower than normal profitability. So in such a situation, even at low price to books, even at low market cap to GDP, the P's appear to be elevated. So I think there is good value in these markets. India is recovering very nicely. The macroeconomy is doing well, and markets are not overvalued. So I am optimistic for the markets with a medium to long-term view. But short term is always extremely hard, and I think it is actually futile to try and guess markets over the short to medium term.
Well, moving on to technicals and derivatives, what can we expect, and within what range can we expect the Nifty to move as we move into trade next week? Now, it is a new series, and what we've seen is a lot of accumulation around the 10,500 put. But don't forget, we also have considerable accumulation in puts at the 11,000 mark, and this one is going to be a little bit of a tricky situation with respect to your expectation for the Nifty to move. Of course, on the higher end, when it comes to calls, is still at the 11,000 mark, and that's where you're seeing a lot of accumulation building in. So it's anyone's guess for now. Of course, the next few days into the December series will determine whether or not you do see that shift in range upwards, or do we expect a little more consolidation to come through. But let's take a look at what some of these key levels are to watch out for. Technical analyst Manav Chopra had to say about the levels in this. Listen in.
We could see some furthermore legs on the upside. I see that happening going forward. On the lower side, I think 10,650, 10,700 would be the immediate support, and as long as we are holding to those support levels, we maintain our upside target of close to 11,250. And we did had a very good interaction in the month of October, where at sub 10,000 levels we did came out very aggressively and targeting for Nifty at sub 11,000 levels, and for Bank Nifty around 24,000 levels. We did initiate a buy for an upside of 26,500. So keeping all this picture in place, the cycles have panned out quite well, and I think this market could see a short-term consolidation, but eventually that should not pause anybody for initiating fresh longs. Those who had bought at lower levels, it's definitely one should look to book profits at high levels. But eventually I sense that this leg of an upside would continue. 11,250 would be the immediate targets for the Nifty, and for the Bank Nifty 27,000. Once if it breaches on the immediate basis, I think 27,500 and above could be the levels to look out for.
So short-term consolidation is what some of these technical analysts are indicating, but what are the events that we can watch out for as we move into trade next week? Let's take a look. Let's start off by, well, of course, we will have some implications of the Trump-Xi Jinping meet on Saturday, and it could have an implication and bearing on the global markets, thereby our own markets as well. But moving on, we'll also have November auto sales, and that's likely to move the auto sector as well. Do remember we've seen mixed cues coming in for the auto sector so far. RBI monetary policy on Wednesday, where we are expecting to see them hold rates at least for now, but of course these projections can change through the course of the next few days. The OPEC meet would be another very important factor, not only for India but for the globe, and that could determine the supply of oil as we move forward, that we are keeping an eye on Thursday. And of course on Friday and Saturday we will have exit polls for the result of some of these state elections, and that of course could be crucial for what lies in store for the month of December and our own markets. That said, plenty of things to watch out for, but on the whole, we're ending on a very positive note. So we're going to keep an eye on a whole host of these things. And with that, it's a wrap on the markets. But lots more lined up, so stay tuned to Bloomberg.